First about Aspen Pharmacare. What a star company in the pharmaceutical industry globally. It supplies branded and generic pharmaceuticals here in South Africa, Southern Africa, but it's really expanding. It's now apparently in nearly 100 countries. Founded as recently as 1997 by one of South Africa's best loved CEOs, a guy called Stephen Saad, based down in the Durban area. It's grown to have a market cap, if you can believe it, since 1997 of 81 billion rand. Price to earnings ratio relatively high, 27.6, but it certainly delivered the earnings on an ongoing basis, and that's why everybody loves it. Currently pays no dividends, but hang on, it actually distributes an annual amount in the middle of the year by way of a capital reduction, which generates a yield on your basic investment, currently anyway, of about 1%. Okay, Rob, so, I mean, what can you say about a company that's gone from like 30 Rand to nearly 200 in the last 5 years? People have made money owning this one, huh?
Yes, absolutely stellar returns, and they keep, just keep delivering. Stephen Saad and the management team, they are just so solid and so strong. A lot of acquisitions in this process. So one of the reasons why they're not paying dividends is because they're buying other companies.
Yeah.
So lots of GlaxoSmithKline. They've been buying a lot of that product in South Africa and around the world. So that's where they get in their non-generic business from.
Yeah.
And so, very, very strong. And, now 27 PE, though, is starting to get quite pricey. So starting to pay a premium for that growth.
Yeah. Well, let's break apart the bits, because you're right. It started off originally when Stephen and Gus Attridge went to Investec, got the money to buy SA Druggists out of the Malbach Group. That brought them production facilities of some sort down in the Eastern Cape. Then they bought Fine Chemicals, which was in Cape Town. So 3 big manufacturing facilities locally, PE, East London, Cape Town. The global thing you refer to, that's the tie-up with GlaxoSmithKline. So at some point they bought Glaxo's Southern African business in exchange for giving Aspen shares to Glaxo. But that relationship's important because Glaxo is one of those sort of top 5 global pharma giants. And they've got all this old stuff in their portfolio, like, Bactroban, which you stick on your cuts, and sort of, it's an antibiotic type cream. Well, not antibiotic, but a sort of a, anti-germs, antiseptic cream. That's the word I'm looking for. So something like that, for Glaxo, they've got much bigger fish to fry, but inside of the Aspen portfolio, they can get a nice rating on it. So that tie-up has taken them now global, and they're beginning to sort of trade on that thing as well, right?
Yeah, so they bought a lot of Glaxo's brands in Australia.
Yep.
So they got into Australia there. They bought them into Latin America as well. So they've got a footprint there. So they're building that footprint on some good brands, and then they put into all the generics come through there as well. So, now into Southeast Asia as well, really growing and expanding on in areas where there is still growth. So Latin America, Australia not so much, but good margins there. But into Asia as well, they're got some really solid growth.
Well, let's talk about the Australian business, because when they went and bought that thing called Sigma, people were a bit critical. But effectively what they did is that they looked at a product by product basis, and they looked to see if they can produce it more effectively elsewhere. They shut down a whole lot of the Australian-based manufacturing, moved that to other places in India, moved it here to South Africa. So they still got the business, but they really significantly raised the margins. And now they're using that as a bridgehead to go into Asia. It just seems like pharmaceuticals are a great product to go into these new areas in, because they've got high value, high margins, and they seem to be able to get the necessary registrations in some of these countries. I mean, what's not to like?
Yeah, you get in there quite quickly, and there's people that are in need of those medicines. So a Bactroban will be something that somebody needs, really.
Yeah.
They don't need the high-end type of drugs that the Western economies are using. They might need far lesser drugs that are, and a much bigger volume of them as well. So definitely a great business to be in.
And Latin America, I mean, Stephen just announced they were going to go in there. They went and recruited salespeople. He seems to have, again, delivered there, because off of a very low base, that business also growing quickly now.
Yes, so the good numbers out of Latin America, the margins are high as well. And the growth there could be exponential. It's a very, very big geographic area.
Yes.
And they can grow that very easily.
Yeah. And then there's a deal pending currently where they're looking at buying an active pharmaceutical ingredient manufacturing plant in Holland from Merck, which again, that's kind of interesting. So what they've done is they put themselves in the first division with regard to any assets that are going. Anytime anyone's doing any restructuring, they got the ears to the ground. So it really does look as though at 80 billion rands, that's $10 billion, let's round up, round down, size of pharma company, nimble, mobile, just beginning to kind of get some attention from the sort of major players, not seen as a competitor yet, but just certainly there as a potential partner in all sorts of new regions.
Yes, I think so. The one thing that just have to be careful with this. To keep this PE at 27, they're going to have to keep acquiring businesses that are accretive to the business.
Yeah.
So if they can keep doing that, then this premium that you're paying at 27 PE, will be worth it. But along the way, they've just proven that they can do it. So I would carry on backing them.
Well, let's talk about that. So Stephen Saad has got a 12% stake in the company. With an 80-odd billion market cap, that means he's worth, give or take or shake, 10 billion rand, right? So he's done well for himself, you'd have to say.
You could say so, yeah.
If he is going to be, in the saddle running this business for another decade, well, that's great. But, have you got any sense that there's any sort of sense that he may not anymore be, fully committed? Or is it all, you go to these presentations, he's very much man on board?
It looks like he's man on board. I think, still relatively young, growing into new areas which are still dynamic, which will still keep him, moving, keep him active and, going into South America, going excited, etc. So I'm not hearing any rumors from our side that he'll be stepping away. So 10 years with him, the company can go very far.
And of course, the larger it gets, the more attention it attracts from global players.
Absolutely.
People looking for the higher growth, emerging market things. They know the Indians are there, but American investors are not that keen on Indian companies. Why? Because they have foreign rules about ownership, and they have, slightly questionable corporate governance type situations in some cases. So this company, I think, is going to continue to get plenty of attention.
Yes, and as you say, it could be a target for a bigger company going forward.
So even though it's almost at 200 Rand a share, having been at 100 a year ago, you're still hot on this one?
I'm still hot on it. I would like a pullback, back to like 180 Rand or 170 Rand. So some pullback would be nice, but I'm hot on this stock, and I think long term you have to back the management.
Okay, good. I'm hot on it too.